To you, it does look like we're on track for a fourth consecutive week of losses for the Australian market. Have there been any bright spots at all this week?
Liz, it's been a pretty difficult week for the Australian share market. In fact, we've seen every single sector trading lower. The best sector has been the financial sector, but still there we've seen a loss of 2.5%. The big four banks continuing to be sold off this week. We did see a little bit of support emerging for some of the asset managers. In fact, Magellan Financial Group managed a gain of 1.7%, and that takes the last 52 weeks worth of gains to 320% for this stock. We also saw Platinum Asset Management, that was up by 1.2%, and Platinum doing pretty well for the last 52 weeks as well, up by about 30%. On the downside though, we did see a big move in the information technology sector. That sector was down by 8% for the week so far, and if we have a look at this sector, it's the smallest one on the Aussie market. It only contains 4 stocks, but all of those trading lower this week. We saw Computershare down by 9%, we saw Iris also losing about 6%. We saw SMS management down by 6.7%, and car sales down by 5.5% there. But some big moves on the market. I guess the big one this week was Billabong. It lost around about half of its value this week after takeover talks weren't successful. In terms of the upside though, we did see a bit of support emerging for some gold stocks. We saw Kingsgate up by about 15%. We also saw Troy Resources up by around about 14%. But altogether, it was a big week for the Aussie share market, and unfortunately the fourth consecutive week of losses.
Julia, a lot of currency volatility overnight, with the US dollar staging a sharp sell-off against the other major currencies. Tonight's non-farm payrolls report is likely to be key for the direction of most asset classes, but what in particular is it going to mean for the Australian dollar?
It was an extremely volatile night in terms of currencies, and if we have a look, the key theme was the weakening of the US currency overnight. In fact, if we have a look at the US dollar against the Japanese yen, we saw some huge moves overnight. And just having a look at the graph, this is the intraday graph of the US dollar versus the Japanese yen. You can see that during the session, we actually saw a fall of almost 3% at one stage, with the US currency dipping below 96 yen at one stage, which we have seen a little bit of a recovery, but the volatility is expected to persist tonight, and that's because we do see those non-farm payroll numbers. Now, these non-farm payroll numbers are especially important because they are going to feed into expectations around quantitative easing, and when we're going to see a wind back of quantitative easing. The consensus is for 165,000 jobs to have been created in the month of May, and that would keep the unemployment rate at 7.5%. Now, if we do see a number that's higher than this, this is going to feed into expectations that the US economy is doing better than expected, the employment situation better than expected, so a wind back of quantitative easing, and that would mean a stronger US currency and a weaker Australian currency. So no doubt it's going to be a big night on markets tonight. It is the biggest economic release around the globe, and that's really going to feed into not only the currencies but also commodities and equities.
We've got some quarterly rebalancing coming up for the S&P out this morning. What sort of impact do you see that having on stocks today?
We have seen the Standard & Poor's rebalancing for the key indices here in Australia. So these will be effective from the 21st of June. And these are important because a lot of fund managers use this as a benchmark, or they either track the index as well. The ASX 200, of course, is a benchmark here in Australia. And if we have a look at additions and subtractions from the index, they're usually based on both liquidity as well as market capitalisation. We have a look at the additions first. We've seen Automotive Holdings. Now, this is a stock which deals in car dealerships. We've also seen Domino's, G8 Education, which is a childcare group, all being added to the index. We've also seen Link Energy, REA, realestate.com, and Cirrus Resources, which is a nickel company, all being added to the index. So it should be a positive for these particular companies. Unfortunately, we've also seen 6 subtractions from the index as well. So AIX, as well as Coalspur, Imdex, Maverick Drilling, Mirabella Nickel, as well as Troy Resources will all be subtracted. So we'll be watching these stocks carefully to see if there's a reaction. Of course, some people do try to front run the rebalancings, but altogether it does look like we may see some reactions in this stock as some people look to add or subtract from their portfolios on the basis of this rebalancing.
Just finally, Julia, what's your opening call for the local market this morning?
I think it's going to be a pretty subdued session on the Aussie market. We've seen some positive leads come through from the US stock market. In fact, in the US, we did see all of the S&P 500 sectors, the 10 sectors that make up that index, trading higher. So that was a positive. We also saw oil prices and gold prices trading higher. But of course, our market is going to be keeping one eye on Japan as well. And Japan's had a very volatile ride, especially over the last 10 sessions. We have a look at the Japanese market over the past year. This is what it looks like. You can see that the last run-up that we've actually seen a gain of 67% over 126 trading days. But the fall that we've seen a fall of about 10% over the last 10 trading sessions. So we'll be watching Japan closely as because it has had an impact in terms of Australia, but we are expecting to see a bit of subdued session ahead of those non-farm payroll numbers out in the US tonight.